Everything is crashing today, but especially Ethereum is doing poorly, and it's doing poorly for quite a while. Now in this video we're going to look at the long term of Ethereum. Does it make sense to buy this dip now? Let's have a look at why the price is going down. Let's look at on-chain metrics most people are not considering. Now, in theory, Ethereum should be doing pretty well because since the move from proof of work to proof of stake, the new supply that hits the market went down a lot. So since that event, which is called the merge, we have actually seen how the supply of Ethereum shrunk. It's not shrinking in the last few weeks, but since that transition on the 15th of September, the ETH supply went down in aggregate. And had that transition never happened, it would be up a lot by 3.3% per annum. But how is then this here possible? This is Ethereum relative to Bitcoin. And what we see here indicated with this arrow is the transition from proof of work to proof of stake. Ethereum underperformed Bitcoin by 57% since the merge, despite the nice tokenomics. And so recently we see how we're coming down again. And we're not yet at the historical bottom. For that, Ethereum has to underperform another 10%. But the question is, would that even be a bottom? Because if you tried to fish those bottoms in the past and you continued holding, you didn't do too well. Now, one explanation for that underperformance is the Bitcoin ETF. In other words, Bitcoin did better than the rest because there was traditional finance, there was Wall Street that bought Bitcoin. And they're actually still buying Bitcoin. So have a look at the net flows in the last few weeks. It was positive pretty much every single day. So there was spot Bitcoin that was scooped up by Wall Street. And if you look at the last 14 days, we annualize this, we get to a supply absorption of 5.23%. Currently, there is 5.6% of Bitcoin supply in the ETFs. So the Bitcoin ETF holdings will roughly double 1 year from now if the purchasing stays at the current levels. So that's one explanation, right? Bitcoin is simply doing better because Wall Street is buying up all the BTC. However, this explanation doesn't really work because now we've also got the Ethereum ETF. And yes, at the beginning, this was pretty much a flop, but recently, not so much. We do now see net inflows, and it's at a pretty similar rate. 4.7% of the entire Ethereum supply gets scooped up by the ETFs. And still, the overall trend isn't changing whatsoever. Now, I'm personally very bearish on Ethereum. I believe that this downward trend will continue, and here's why. In the last 4 years, we have seen over time that more and more Ethereum got staked. And that staked supply is not hitting the circulating supply. In other words, that staked supply is locked up. It should, in theory, support the price. Still, we didn't really see how Ethereum did better than Bitcoin. But have a look at what's happening recently. Since the beginning of November of this year, this has stopped. We've never seen such a long period of time where the amount of ETH that got staked did not grow. And since this is a very stable chart, right, where we can see the trend very clearly, let's play with the idea that we are now seeing all of that Ethereum getting unstaked at the same rate as we have seen the staking before. So let's say we have seen all of that staking growth at the beginning. People are now losing hope in Ethereum, and now they start unstaking at the same pace. We've got 4 years of data here, and 33.9 million is currently staked. The total supply of Ethereum is 120 million. So 28% of all of supply is currently staked. Now that happened over the course of 4 years. And so let's assume that we see exactly the opposite trend. Over the next 4 years, we see all of that supply hitting the market. That's 7% of the entire Ethereum supply per annum. Yes, Ethereum did not have an ETF in the early days, but it did have a staking program, and the staking program absorbed 7% of the supply per annum. It took more supply per annum out of the circulation than the ETF is doing today. And that's true for the Ethereum ETF. It's also true for the Bitcoin ETF. And so what might look like great tokenomics on the face of it, because compared to proof of work, Ethereum didn't see all of that new supply, we might now get a time of continued unstaking, potentially at a rate of 7% per annum. And that would be worse, potentially at 7% per annum. And that's more than is currently bought by the ETFs. So you see 2% of Ethereum supply getting added to the market potentially, while Bitcoin sees 5% of its supply getting removed from the market. That's why I believe Ethereum relative to Bitcoin is likely going to continue to underperform. And when we actually zoom out, this is not really a surprise. We have seen way lower Ethereum prices relative to Bitcoin in the past. The worst case might be something like what we have seen in September of 2019. So that would be a continued underperformance of another 55%. So we've just seen half of the pain so far. I cannot predict the future. I'm simply just sharing the data how I see it. I don't really like that there's no more staking happening for Ethereum. It seems like now unstaking happens, and that unstaking is probably going to get sold. Why else would you unstake your ETH? Probably not for active trading, because active trading on Ethereum itself is rather slowing down, right? That's why the supply tends to rise recently. There's not enough Ethereum that gets burned through the transactions. Now here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum, and thus the altcoin market, is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics. The supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 US per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.